Hey everyone, welcome back to the Deep Dive. We're going to be talking about something that's really important, especially if you're keeping an eye on crucial economic developments and getting ready for exams like the UPSC. Today, we're going to take a really in-depth look at the India-China trade relationship.
It's definitely a hot topic right now, and it's one that's constantly evolving, especially when you consider all the geopolitical pressures and recent events that have been shaping the global landscape.
Absolutely. So we've been looking at a lot of recent reporting on this, particularly some insightful pieces from the Economic Times, and we really want to break this down for you.
Yeah, the goal today is to move beyond just the headlines, to really get into the details of what's actually happening between these two economic giants, why it matters, and what we might expect going forward.
Okay, so let's start with the basics. When we look at India and China trading with each other right now, what's the overall picture? What kind of numbers are we talking about?
Well, in the last fiscal year, FY24, trade between India and China hit $118.4 billion. And that actually puts China back in the top spot as India's leading trade partner.
Top trading partner again, huh? That definitely makes you pay attention.
Mhm.
So out of that $118 billion, who's buying what?
Right. So looking at India's total global imports for FY24, that was $675.42 billion. A big chunk of that, about 15%, actually came from China. That means India imported $101.74 billion worth of goods from China during that period.
Wow, that's over $100 billion flowing from India to China. But what about the flow in the other direction?
Well, that's where we get into the issue of the trade deficit, which is a pretty significant issue in this relationship. We're talking about an $83 billion deficit that India has with China right now.
Okay, that's a huge number. Can you explain what exactly that means and why it matters?
It means that India is buying a lot more from China than China is buying from India. And this isn't just about abstract numbers. It represents a real outflow of capital from the Indian economy, and it highlights a kind of structural imbalance in the relationship. And the Economic Times reporting points to two key factors driving this deficit.
Okay, so what are the main reasons behind this big gap?
Well, firstly, India's export basket to China is pretty limited. We mainly send them primary commodities, things like iron ore or some agricultural products. We haven't really been able to break into the Chinese market with higher value manufactured goods, where the profit margins tend to be better.
I see.
And secondly, there are significant barriers to entry for India in some key sectors where we're actually quite competitive globally, things like agriculture, pharmaceuticals, even IT and IT-enabled services.
So it's not just about the overall volume of trade, but the types of goods being traded and the challenges India faces in exporting more of what it excels at. Now, given this huge volume of trade, you might think that there'd be a lot of Chinese investment flowing into India.
You think so, right?
But the numbers actually tell a different story.
That's right. Despite all that trade, when it comes to foreign direct investment, FDI, China is actually ranked pretty low, down at 22nd place for equity inflows into India.
22nd. Wow, that's surprising.
Yeah, it's a pretty stark contrast. And the cumulative FDI from China between 2000 and September of 2024 is only about $2.5 billion.
That's really interesting, especially compared to the trade figures. But there's talk about potential changes on the horizon. The Economic Times mentions that there's an appetite in China to boost investment into India.
Right, and that makes sense. The growth in investment really hasn't matched the surge in trade, and there's a growing recognition that more investment could be a way to start balancing out that trade deficit in the long run. And of course, increased investment usually brings technology transfer and job creation, which are really important for India's development.
So we have this imbalance in trade, relatively low levels of investment, and now there are discussions about India potentially easing some of the trade restrictions that are currently in place with China. What's driving this potential shift in approach?
Well, there are a few things happening at once that seem to be creating this opening. There are reports of some easing of tensions along the India-China border.
Mm.
This creates a chance to think about broader improvements in the economic relationship. Then there's the pressure from the U.S., particularly under the previous Trump administration, for India to lower tariffs and move closer to the U.S.'s trade terms. Easing up on restrictions with China could be a way for India to gain more strategic flexibility.
So almost like a delicate balancing act on the global stage.
Exactly. And the discussions about easing these restrictions seem to cover a pretty wide range, potentially lifting some of the tariff and non-tariff barriers that affect trade, easing visa restrictions for Chinese business people to make it easier to come and discuss business opportunities, even the possibility of giving access again to some Chinese mobile apps that were banned earlier. And a key point is allowing more Chinese investment into India with the hope of addressing that stubborn trade deficit.
Right. Those restrictions were put in place for a reason after the Galwan clash in 2020, so any easing would definitely be a big shift. Now, these are big decisions with big implications. What role are Indian industries playing in this whole conversation about trade restrictions?
Indian industries, especially the small and medium-sized enterprises, the SMEs, are actually quite vocal about wanting a reevaluation of some of these trade barriers. They often feel the direct impact of these restrictions, and they see a lot of potential benefits from smoother trade with China.
So what are some of the specific changes they'd like to see?
Well, one thing they're pushing for is a streamlining of the BIS certification requirements for imports from China. The Bureau of Indian Standards sets standards for quality and safety for a lot of products, and these are important. But businesses argue that sometimes the process for certifying Chinese goods can be really lengthy and complex and act as a non-tariff barrier.
Right, so it creates an unnecessary hurdle.
Exactly. And they also want to see easier visa extensions for Chinese workers who are involved in infrastructure projects in India. Delays there can really impact project timelines and increase costs.
So there's a real push from the ground up for some adjustments in the trade relationship. Circling back to the international picture for a moment, you mentioned U.S. pressure. Could getting closer economically with China actually give India more room to maneuver when dealing with the U.S. and other major powers?
Yeah, absolutely. If you think about it in terms of the larger geopolitical game, easing up on those trade restrictions with China could give India more options in its global trade strategy. By not being overly reliant on any single trading partner, India would be in a much better position to deal with pressure and demands from countries like the US when it comes to things like tariffs and trade agreements.
It's really about strategic autonomy for India.
Exactly. And the fact that even a presentation within India's own finance ministry supported easing some restrictions really highlights this desire for more flexibility. Now, on the investment side, are there any specific sectors or types of investment that India might be more willing to accept from China?
That's a good question. It seems like the approach being considered is one of caution, like a gradual opening to Chinese investment, with a preference for joint ventures where Indian companies would have a significant stake, maybe even a majority. This probably reflects a desire to attract capital and technology, but also to protect domestic industries and keep a degree of control.
Makes sense.
An economic survey from 2023-24 actually touched on this. It suggested that encouraging Chinese investments in manufacturing, for example, while being careful about imports of finished goods that could compete directly with local production, would be a smart strategy.
Right. The idea is to use investment to build up India's capabilities, create jobs, not just flood the market with finished products. Now, let's talk about the China plus one strategy. The idea of companies diversifying their supply chains so they're not solely reliant on China. How's India doing in attracting businesses who are looking to implement this strategy?
That's a really important question, and a recent TradeWatch report from Niti Aayog in December 2024 suggested that India hasn't been hugely successful in capitalizing on the China plus one trend.
Right. Despite all the talk, we haven't seen a huge shift of manufacturing to India yet, certainly not on the scale some were hoping for. And that's despite the rising labor costs in China, the U.S.-China trade tensions, the COVID-19 disruptions, all those things that were supposed to drive companies to look elsewhere.
That's a little surprising. But the Economic Times did highlight some recent developments that might indicate a shift, even if it's subtle.
Yes, like the fact that SAIC Motors, a Chinese company, is selling off its stake in MG Motors in India, while Shine, that big online fashion retailer, is coming back to the Indian market, but through a partnership with Reliance Retail, a major Indian player.
So it's more nuanced than just a mass exodus from China. It's really a more complex and evolving picture of how companies are adapting. So to wrap up, what are the key takeaways for understanding this whole India-China trade relationship?
I think the big tension here is India's need to bring in more investment, especially from China, to help tackle that massive trade deficit while at the same time trying to become less reliant on imports from China, particularly finished goods. Any move to ease trade barriers is going to be very gradual and strategic, with India's overall economic and political goals in mind.
Right, and for our listeners who are preparing for those UPSC exams, this really highlights a key aspect of India's foreign economic policy. It's this constant balancing act between, on one hand, the economic opportunities offered by a major partner like China, and on the other, strategic considerations, particularly in the context of relationships with other world powers like the U.S. It really raises some important questions for India's future. What does this all mean for the growth of our manufacturing sector, for our aspirations to become a global economic power? How might these shifts in global supply chains shape India's strategic choices? These are the kinds of things to be thinking about.
Absolutely. Understanding those underlying trends and potential future paths is key to really grasping the complexities of India's position in the global economy.
So on that note, we'll wrap up this episode of The Deep Dive. If you found this analysis helpful, do hit that like button and subscribe to the channel for more deep dives into the topics that matter for your understanding of current affairs. And as always, feel free to leave a comment below if you have any questions or thoughts. This episode was based on recent reporting from the Economic Times. Thanks for tuning in, and we'll see you in the next deep dive.